Hello friends, today I will discuss a very important case. The name of the case is Income Tax Officer versus Mahindra Singla. This case has been reported in 97 ITR Tribunal at page number 587 and the matter has been decided by Chandigarh ITAT. The judgment came on 14th June 2022. Friends, the logic of discussing this case is that sometimes when the balance sheets are prepared, due to the clerical error or due to the oversight, sometimes it happens that there is a mistake in classification of the various amounts. For example, sometimes we take the figures of sundry creditors into unsecured loan or unsecured loan into creditor. And when we realize that these mistakes have taken in the coming years, we also rectify those mistakes. In this particular case, the same thing happened. Assessee took unsecured loan of 2 crore of rupees from two parties and this unsecured loan was classified as sundry creditors into the balance sheet. After some years, the assessee rectified this classification and took these amounts into the unsecured loans. During the assessment proceedings, the assessing officer made the addition under section 41 subsection 1 of these amount by saying that these were sundry creditors during the last previous year, or the balance of these sundry creditors were outstanding during the at the beginning of the year, but now this is not outstanding and the assessee has not paid any amount for their payment. So it means that the assessee has not made the payment but this amount is not reflecting in the balance sheet. So it means that these amounts have been written off into the balance sheet. So by this logic, the assessing officer made the addition under section 41 subsection 1 as a cessation of liability. For section 41 subsection 1, the prime condition is that only that amount can be added under section 41 subsection 1 which has been debited into the profit and loss account in the earlier years. Meaning thereby that if the assessee has claimed those expenses as an expense and that liability is written off in the coming years, only that amount can be added under section 41 subsection 1. During the assessment year or during the assessment proceedings, the assessing officer made the field inquiries also, and in that field inquiry the inspector gave the report that at the places of the lenders there was no person there, the notice was not served. So assessing officer alleged that the assessee has paid cash to those parties and has taken some checks. So this was the general allegation made by the assessing officer. But the assessing officer made the addition under section 41 subsection 1. When this matter came to the CIT appeal gave relief to the assessee. So the department was before the Honorable ITAT and ITAT also gave the relief to the assessee. Now the question which was before the ITAT was that whether this addition is legal under section 41 subsection 1. So if we go into the bare reading of section 41 subsection 1, this amount cannot be added back because this amount was never claimed as an expense into the profit and loss account of the assessee. Now the question arises whether this amount can be added under section 68 during the current assessment year. So because this amount has not been received during the year, that amount cannot be added under section 68 also, because under section 68 only that amount can be added which has been received during the year under consideration, but this amount was received 7 or 8 years back. So as far as the addition under section 41 subsection 1 is concerned or section 68 is concerned, this addition was not legal in law. So the ITAT also deleted the addition and gave relief to the assessee. Friends, this case is very important by the analysis of this case, we can say that whenever we are preparing the balance sheet, we should give very attention to the various heads under which our amount should be reflected into the balance sheet, especially in the case of sundry creditors or unsecured loans. If they are unsecured loans, they should be taken into unsecured loans. If they are sundry creditors, those should be taken into the sundry creditors. At the end of this video, once again I am repeating the name of the case. The name of the case is Income Tax Officer versus Mohinder Pal Singla. Thank you, friends.